One.
5-day win streak in jeopardy right now. Down 9.5 handles off that all-time closing high. Meme or not to meme? That is the question. Momentum yesterday, fading a little bit today. Can make a tech bring us back? Big earnings reports, big guest lineup. Ryan Detrick, 8:35, and got a special new guest coming on at 9 a.m. Someone that hasn't been here in a long time. We'll make that a tease. We'll get things started with the crew on Tuesday's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's get my chart up there. S&P's down 10.5 handles. Never saw, just barely saw that closing price at 31.75. That's a big bogey. We have the buck, the dollar, trading up 38 cents, 105.83. TLT backing off after a 3-day win streak, down 44 cents, 91.60. Crude up, USO up 38 cents, 71.32. Gold and silver in the red again here. GLD down $1.56 to 40.58. SLV under 28, 27.77. Bitcoin futures after that monster 4-day rally, taking a little breather, down just around $400 at 87,350. Let's bring the crew in here, get things started. I could say triple D and AB simultaneously, but how do I get Christian Fromhertz in there? How do I add
simultaneously as well? He's in there too. Everybody's here. We got Christian guest hosting with us again today too. So thanks from Christian from the Tribeca Trade Group coming over to spend his morning with us here once again. Pre-market prep off and running here. Joel. What happened here overnight?
Well, I do have some breaking news.
What is it?
We got a dog yesterday.
Whoa!
You got another dog?
Yes.
Wow.
Yes.
Perry part 2?
Well, I would bring her back down, but she's a little rambunctious right now, so
Yeah.
I'm gonna give her a couple days to calm down. But
is it a puppy? You got a puppy?
A rescue, 4-year-old.
Oh, beautiful.
Yeah, a little cockapoo, and it looks exactly like Perry.
Nice.
But this was not. This is Lisa wanted a dog, and she loved. She works hard. And
you had Perry for how many years, Joel?
We had Perry for 17 years.
Yeah, that's a big hole in your family. So you know how to replace that hole? Get another dog. I'm with you there. Your dog family, you like a dog, get a dog. We love dogs.
Its name is, I don't know if we're going to change it. Its name's BB.
It's kind of fun.
Yeah.
BB.
Yeah.
BB.
But anyways, that someone said that Dogecoin is up. But that's it.
That kind of is a natural segue to what we're going to start with today, and that's just the meme trade in general. So whether you're looking at some of these cryptos, the meme coins, Dogecoin, whatever it is, was heating up yesterday. And so, of course, in the stock market, GameStop leading the charge in terms of those meme stocks, that basket. You had AMC closed up over 5% yesterday as well. And then these other stocks that aren't necessarily in that like meme stock basket, but definitely retail favorites like Affirm closed up 24% yesterday. So this hype and momentum trade is back, at least for now.
It is. And I mean, it wasn't just the crypto, it was across the board. And we've seen this time and time again. What happens? You get a market rally, stocks start going, and then the memester stocks start getting hot. And it usually is towards the end of the overall rally, unfortunately, if you're using it as an indicator. But there's been big movers, and one I talked about yesterday with Brian Shannon on the show, GameStop. It was around $25, and she popped to 28 yesterday. It was a big pop for GME. I am long GME, and I'm like looking at it here. give it back a little bit here. I don't know if the trade's over here yet, but it's cooling off a little bit this morning. This meme, again, to meme or not to meme, this is, the question of the day. I want to get Christian's thoughts here because we saw, the markets were very mixed yesterday. A lot of mega cap tech weakness. Tesla obviously very strong. Retail, meme stocks very strong yesterday. Today, a little bit of a reversal where you're seeing some of the mega cap techs catch a little bit of a bid. Memes cooling off just slightly here. Christian, overall thoughts on the meme trade?
Yeah, good morning, guys. The meme trade, I mean, typically we've seen this for different reasons. We've seen the meme play kind of go on from time to time. Usually it seems to be like a couple days. So I don't know if we're starting to get a little bit long in the tooth regarding that, but I think AMC, GameStop, those are good to kind of watch. And, I think just overall, because, the meme kind of follows towards the end of a big momentum move. So, we were talking about this a little bit yesterday too, just about monitoring, if you've got a couple of these momentum names on, how do you monitor some of these names? Because I'm definitely, trading some of these too. Like I traded Affirm yesterday. I still have some Affirm on from yesterday, and it's just really just monitoring, and bringing up your trailing stop. Also, so having that downside alert, because, it's tough to manage, like for me, like more than a couple of these things, like two or three names, I'll participate in, I'll try to kind of catch some of these upside moves, but, they can reverse pretty quickly. And, case in point, I think, one of them, Upstart, has a secondary this morning too, or
convertible offering for Upstart. So nothing kills a rally quicker than a convertible offering. And we've talked about this before too. Some of these stocks, not Upstart maybe necessarily, but a lot of companies that aren't just swimming in cash, when they get these significant rallies, they use the opportunity to raise some cash. So overnight here, it was announced Upstart announces a proposed private offering of $425 million of convertible notes. When they're not convertible, but when they get that convertible piece on them, that is potential dilution. And then you start seeing the stock go down. I'm getting hit a little bit on here. I took a little flyer on the dip last night before the announcement. And obviously the stock continues down after the announcement. So I think a few people maybe were thinking that something like this could happen, or maybe knew something like this could happen, because the stock was trading down $1.50 ahead of the announcement. Now the announcement comes out 6:55 this morning. Upstart down 5%. Joel, give me some technicals.
Oh boy. Just look at the pre-market low here. It's a convertible offering, so we don't have an exact price on that, right? 72.35 is your pre-market low, down $1.30. I mean, let's look for continuation of the downside. If you hold that pre-market low, coming back on the upside, a lot of people are jammed. The lower end of yesterday's range was 76.63. So there you go. A lot of air in here if you lose that pre-market low. And I just a general comment on these meme stocks here. Watched unchanged, right? GME, you took it home. I don't know, Dennis, where you got in. People are like, oh boy, I thought this was going to last another day. I got a mark against me. So, yeah, just keep an eye on the mark. If this goes green, well, then, yeah, maybe we go back up to yesterday's high at 28. But right now, got to get back to green. So watch the closing prices on many of these things that are open lower today.
There's one more that I was going to mention too. That's been a big moment. It's been a smaller cap momentum name. It's been a software name. So the IGV ETF has been just straight up has gone vertical. If you want to bring that the IGV ETF up quickly,
up every day.
Yeah, it's been so. That to me looks stretched. Of course, we know that things can continue to go a little bit higher, but higher. And that's been going up. I think just drastically. That's been one of your biggest outperformers actually since since the election. But take a look at the small cap name. It's called Zeta, ZETA.
Oh yeah.
And this is a name that really ran into the report, like a number of names are doing. But take a look at the reversal in this one. And, I tweeted this one out last night because I just couldn't believe that at one point it was up like 20%.
Wow.
And it kind of just felt euphoric, and it did reverse. And I had a number of people asking me like, hey, what's going on? Why did it reverse? And I'm like, well, it could be it's a little bit of what's called profit taking too, because it's a pretty dramatic move. So I think that's another one to kind of keep on the radar.
People don't like it when the stocks reverse.
Yeah. 45.79.
That's your number? 45. 45
That's what it hit.
Come on, when?
Yeah.
Last night on earnings?
Yeah.
At $45?
Yep, 45.
I didn't even know what you were talking about. I see it there. That's incredible. I mean, these algos get all, they get that syrup in them. They get all antsy in their pantsy, and they just can't help themselves. I mean, this thing was up $10 last night on this, and all of a sudden it's red. Like, that's, a wicked key reversal on that thing then. Obviously we don't have the bar from today yet, but might as well just call it as $45. That's incredible. That's incredible. That's the reversal of all reversals there. So you never want to see it. The Airbnb did the same thing. And when they do that, they rarely go back right away. So when you see, the stock open up 10, give it all back, you rarely see it go back up 10. So, because then you've got everybody trapped traders up there, caught from chasing last night, trapped algos up there, caught from chasing last night. And let's just talk the meme trade a little bit here overall, because you've had a pretty good reversal overnight here too. I mean, you can come on and you can say like Tesla, it's having a little bit of a pullback here this morning. But Tesla last night on Robinhood/IB overnight session was hitting 366. Like, it's just gone parabolic. I mean, rocket ship, SpaceX, obviously Musk blasting off into orbit here. 358 was the high yesterday. Took that out obviously in the after-hour session. I mean, we're straight up 100 points. This is, a huge market cap company. So, I mean, again, if you're in it for a trade, it's probably time to ring the register. I'm in it, long-term investment. I believe in the long-term story here. I've been preaching the long-term story. I'm up 80% on it. Still holding strong, but I mean, that's a lot of money really fast here. Christian, what are your thoughts, Tesla?
Well, there was a lot of victory laps last night. Normally I go through charts like on, after a Monday, and I kind of just took a little bit of the night off because I just saw there's a lot of euphoria. I saw both a lot of, if you opened up Twitter just for a minute, there was people just, doing a lot of Bitcoin cheering. I heard Bitcoin is definitely going to 100,000. Once you start to hear people say this is definitely going to this, it usually to me is a little bit of like pump the brakes, because people are starting to get way over the tips of their skis in terms of like calling stuff and the confidence. So I think it's really important to kind of watch what some of these stocks do today, because that is an overnight. It's not to me as key as an intraday reversal, but the overnight reversal I think is also interesting too. So I would keep an eye on what Bitcoin does today and Tesla, because these stocks seem to be kind of wrapped into one.
The leaders.
Yeah, and I did take profits. So again, like I had Tesla in 2 accounts, and I still have Tesla in 1 account, but I did take take profits in Tesla yesterday. So I rang the register in a couple of these things. I got out of Tesla and I got out of Upstart. However, that said, I did switch a little bit. I did switch to Affirm, as I mentioned. So, taking profits in some of the ones that are super extended, and moving over to because Affirm is still very much a momentum name, but just taking a look at that. And we could talk a little bit about Shopify too, which I thought was a good opportunity, which reported earnings this morning.
Yeah.
Let's go ahead and get into some earnings reports. So you mentioned
AB, your mic is like cracking. I'm not sure what's going on there. Just play with your mic, just maybe the connection there. You were good before.
Okay, hold on.
Okay, we're going to put AB. AB's going to try to fix his mic here. I just want to talk Tesla for one more second. We're going to go race to Shopify here. So I'm with you, Christian, here. I think at this point in time, talking against my book, but at this point in time, it's overdone. If I was in this for a trade, and exiting these things is always the most hardest trade. Entering, I've always been great on entries. Exits are always difficult. When they go parabolic, the party can end anywhere. I mean, it's up 100 points. It's up like 40% in a week. When your stocks go up 40% in a week, you usually take the profits. Like that's, a year's worth of gains in a week. Did everything fundamentally change here? Yes, he's in a better position. Yes, he's, been, cited with Trump every single day since Trump won the election. Yes, it's the regulation. All this is true. Stock's worth probably way more than it was prior to the Trump election, even from a fundamental basis. Is it worth 100 points more instantaneously? Maybe not. I think it's a cooling period. If I was in this for a trade, I would take the profits right now. In it for a long-term investment, my average cost is $180 on it. I'm trying to forget about it that I own it on those long-term shares. But the trade aspect, trading it now, and I was trading it a little bit last night as well. But I think trading it from the long side here,
getting a little tricky.
I think you're gambling a little bit too much. Let's go to Shopify.
I just want to say the mark on this one's important too, because it's just a nice round number, 350. So there you go. You're down away from that. So I think we'll see if that's tested today. Then the rally's still on. Yesterday's low is way down at 336. Right now, that doesn't look like it's in jeopardy. It's $8 away. After that, you got a gap fill down to 328.71. So quick technicals there on Tesla. Do we have AB back, or are we going to do the shop?
Yeah. Do I sound better?
Yeah, you do. You're good. Let's go to the shop.
Okay. Cool. All right. So Shopify reported this morning. Company reported EPS of, let's see, we got sales at 2.162 billion, beat the $2.11 billion estimate. I'm not even seeing an EPS in here, but it did report. It initiates a Q4 2024 outlook that was above consensus. It said monthly recurring revenue up 24% year over year in Q3. So obviously a strong report with the stock up 15% this morning. And is this the first time we're above $100 on Shopify in
a long time?
A long time. Yeah. Cause this thing got up to, let's see, I can't read that Joel's chart right. Up to $200 almost. And then down to 25. Now we're back up to 100 for the first time in over a year. So if you've been bag holding Shopify for a while, today's a good day.
Yeah, and sometimes even you've been bag holding a long time, it's a day to unload the bags. I mean, people are like, this is the breakout. It's $103 here now. Now we're going straight back up to 200. Give this one perspective here too. We were $78 5 days ago. That, if I'm doing my math somewhat correctly, looks like about a 28%. People say, oh, it's 27. I did that in my head, folks. About 28% to 29% rally here, maybe even a 30% rally, depending on where it's been pre-market, in 5 days. So what I just said to Tesla probably applies to Shopify as well. When you get 30, 40% moves 5 days and they're on for trades, take the money and run is usually the call. It's the Steve Miller Band market right now here. Christian, thoughts?
Yeah, I mean, it's kind of interesting because this is just symbolic of a lot of names too, because I like the chart that that Joel has there in the bottom right. I mean, this stock, there's a lot of stocks at this point that are breaking out, right? Meaning, they're going to all-time highs. But then you look at a number of these stocks like a Shopify, and it's not even close to all-time highs. So yes, it's had this really, it's had a very big move over the last few days, which is a great point. But it's a question of how much are these names going to catch up? So from a technical standpoint, I like that $100 mark. If you're looking at this name and let's say you're not in it or for whatever reason, I would be watching that $100 level. I think that's a great psychological level. On the upside, I do see some resistance at 104 in terms of some overhead supply. So that would be an important level, I think, to get over is 104. We discussed this one yesterday on the show. I did put on a call spread for this one. I thought that was the right way to play it.
Nice.
I'm not going to count my chickens yet before they hatch because I'll have to wait to the open to try to get out of this one. And I'm in the 94-102 call spread. So I need the stock to kind of stay in these levels. I don't know if I'm going to try hedging that, but I'm worried that it might leak a little bit. if we start to see the momentum trade dry up a little bit. So that's something that I'll be watching. Maybe I try to hedge it a little bit, but I looked at I always look at the implied move and the calls outright, but I had to pay up for that call spread, even though that's out of the money, 904, 102. I still had to pay about $2.45. So just shows you it is tough with options, and even making it into a call spread was expensive to do.
Yeah, and they don't give you that satisfaction too. Like, oh, it's over 102, baby. Let me in. Let me cash it out for $8. They don't do that. That thing will probably be up, I don't know, $6.80, $7 or whatever. Maybe if you're lucky. Christian, I see the pre-market high here, or excuse me, the after hours high. That was a spike to 105.40. I love the 100 level because this is halfway back on the monthly. I'm just curious, how did you come up with that 104 level? Is that because I've got nothing in here on mine on the daily or the weekly? What are you looking at to come up with
use the
that
expected
104?
move?
Sorry, I muted myself. This is what's like on my technicals. It's called a virgin point of control. It's just an area where there was a lot of volume previously, and you'll see that when you hit a level of overhead supply, sometimes it'll be a speed bump. And it becomes like a battle of new buyers and existing sellers. So I think that you guys mentioned that there is some overheads. There's definitely some overhead supply that's in this name. So I have a pivot point of like right around 104 that's telling me that there's some resistance and that there's some overhead supply. So new buyers are going to have to run with the ball to get it over that level.
Jump back over to a few other earnings plays here. Some retail darlings here. I don't want to stick with the ones that are really retail driven here. On holdings isn't a huge move here this morning, but it's got a lot of hype behind it. Stock was running into the report as well. Again, what worked very well for me, in the last one was working well forever, but working very well in the last week was buying stocks ahead of reports. I was on multiple times through this, playing it from the long side ahead of the report. Sold my shares last night up at 53.19 ahead of the report. Wow. It's up another 50 cents last night ahead of the report. So they can't even help themselves. Up 53. I was selling all over the place in the 53s last night. I don't know, it's been wild off the report. AB, give us those numbers for on holdings.
Yeah, so On reported an EPS of 17 cents that missed the 23-cent estimate. Sales came in at $734.5 million. That beat the $704.5 million estimate. So you had a miss on EPS, a beat on sales. They raised their outlook, sees fiscal year 2024 net sales of, they gave it in what's the Swiss currency, I guess. I mean, I can deal with euros, but once we start getting into whatever they use over there, I don't even know. I don't know what these numbers are, but they increased their guidance, which is a good sign. Regardless, like you said, the stock mild move down, actually 91 cents this morning. So I guess the report failed to impress all the investors out there.
And again, when you run up into the report, sometimes you really got to blow it away to impress the investors. And sometimes they do continue. This is wild, though. The range off this, Joel, again, the algos are just all over the place on this thing. Up, down, left, right. What is it again? It's Irish script. Up, up, down, down, left, right, BA, select, start. Did I say it right this time? The old infinite men and contra. It's all over the place.
I don't know, Dad. Help me out with that one, Dennis.
I say that all the time, but they yell at me. I get it wrong. BA select. I use the BA select start because then you can go to the two men. That's what it always was. So play with my buddy.
Joel's
so
lost.
BA select
You've
start.
officially lost, Joel.
Hey guys.
Yes, mostly correct. Mostly correct. Laugh out loud. Yes, wrong. FLA says wrong.
Hey guys,
is it a game or something? What the hell?
Yeah, Joel, you never played video games, so back in the day, you get infinite and contract. You did the code on your Nintendo
Christian's
controller.
okay.
It was up, down, down, left, right, BA start. But if you wanted to play with the two players, it'd BA select start. And I was always with my buddy Josh, and we were always not Josh Walter, but a different Josh. BA select start. We really went on a crazy.
Yeah, wow. I tried to. Christian, you got some breaking news there?
Yeah, Elliott is amassing a $5 billion stake in Honeywell. That's been an underperformer in the industrial group. So that just hit the tape. It's causing Honeywell to pop. Sorry, didn't want to interrupt, but
no, always 100% of the time when you have breaking news,
Yes.
we interrupt here. We are still a breaking news show. This is a huge move here for Honeywell. The funny thing is Honeywell, Elliott is usually one that likes to buy beaten down names that are like, this is not that. Honeywell is very close to all-time highs and actually going to make new all-time highs here right now. $5 billion plus position here in Honeywell. This is according to Bloomberg. Bloomberg's usually right. 245 up 8%. Huge move for Honeywell. Christian. How would you play something like this?
That's right. It is close to highs, and you're right for Elliott. They normally go after beaten up names, but relative to its group, it has been beaten up. Take a look at ITA, right, which is more of your aerospace and defense, which you can see what that group has been doing. That's been blasting off to new highs now for a couple months. It's been really one of the biggest outperformers. Well, not anymore considering over the last week, but previously the aerospace and defense group has been very, very strong. You look at Honeywell, it's been going sideways. So this should get it to what's that level? 240. If it breaks over 240, that would be a new high. But they could be trying to unlock, thinking that it goes up versus its group, because there's a way that I don't know if you could do this in your charts, but if you do Honeywell versus ITA, you could kind of see what I mean, because it has been an underperformer versus its peers.
Wow. This Honeywell, if this was your target area here, just hit 247.93. You're still holding a bid up here, $1.60 away. So just keep an eye on your pre-market high. He already has the stake, correct? Because you said amassed or is going to amass?
Yeah. They don't tell. Elliott is not one that says, hey, we're thinking about buying this one. Why don't you guys all go buy ahead of us and then we'll buy elevated prices? No. The activists load up, and then they let you know.
Wouldn't that be nice?
That's kind of a nice edge. They're up 9%. Just letting the market know.
I think Kramer was talking. We're talking about this one too. But man, if you got a target in this area, go ahead and take it. If you're buying this thing off the open, make sure it's bid. Wherever that opening print is, because that's just a huge move for Honeywell. And look what it did, boy. Did you get the memo yesterday or a couple days ago? Holy crap!
That's all Elliott's friends.
Oh my gosh! Just under.
No, we didn't say that out loud. We love
Elliott.
We didn't say that out loud.
I just asked.
Some people think it, but no. Elliott's good. We love Elliott.
Just real quick, I was just looking at the on, and I just wanted to say the Bulls got to get this over 52. That was yesterday's low. That's the highest low it ever made. And you know what? It's drifting lower here. So you're getting into a pocket area. I'm not going to talk about the pre-market. Well, the pre-market low is down there under 49, but your next daily low to contend with yesterday, your 2-day low, 49.57. You did breach that on the initial move down. But right now, keep pre-market low 49. But right now, next level, ON 49.57.
All right, keeping the earnings train ticking. Let's talk some Home Depot reported earnings this morning. The old Home Depot reported EPS of $3.78. That beat the $3.64 estimate. Sales came in at $40.217 billion. That beat the $39.17 billion. So double beat on EPS and sales. And then they gave their EPS guidance for the next quarter. That came in line with estimates, actually slightly below estimates, but all in all, it was a decent report for Home Depot, and the stock's trading up about $7.50 or 2% this morning.
I know Joel's licking his chops, looking at this 420 level.
This how are you going to draw the line?
This is the Harlan pie-in, like what level? Bring up a daily, what level jumps out and bites you in the nose. 420. bites you in the nose, not because of it's a pot stock, but because it's the level of all levels here. That's where it got up to in October multiple times. And the algos, they don't do the technicals. They just go up and buy it up to 420. But the smart people were selling it at 420 here this morning. That's your level. Until 420 is broken, I would say guilty until proven innocent. Maybe above 420, it starts to get interesting. I'm sorry I took your playbook on that one, Joel.
That's okay. That's okay. Well, just going back, I saw it on the dailies, but what about a little the monthlies here too? I mean, going back, the all-time high, 420, 61.
Oh man,
yeah.
2021. This is like the level. If you could put how many stars? If you were doing the stars for levels, how many stars would get this 420?
I'll tell you right now. I'll do it right now, right live.
He's going to show you live right now how many stars. Oh my gosh, that's the most stars I've ever seen.
There you go.
That's a level of resistance, folks, and that'll stay on the chart. Joel, keep that on the chart until we break that level.
All right, Christian, any comments on Home Depot?
Basically, what I heard too in the commentary was that they were making money off of the hurricanes and some of that. So it's been an interesting group. I moved to kind of neutral a bit on the home builders and the housing stocks. So I don't really have a strong view on this one. I would watch 417. That's the level that I'm watching for today, and that's kind of right where the stock is. But I'm not opposed to seeing it break higher. But I just think that the some of the home builders and the housing stocks got a little bit tired.
And again, maybe a lot of people expected too, that this, like I saw them talking yesterday even on CNBC, the hurricane trade's going to pop this, analysts on there, the hurricane trade, they're going to have good numbers because of the hurricane trade. So a lot of that, they were good numbers. So, but a lot of that maybe people thinking, so just be careful this doesn't continue to leak. Again, technicals just jumping out and biting me. I'm not buying a 416 when I see a huge wall of resistance up at 420 on a stock that just reported. I'd be more inclined to play it short off of maybe that level or upper levels and then cover if it starts going 422, 423. Always have a contingency plan because resistance is resistance until it's broken.
All right, well, we do have a couple other earnings stocks, but I'm going to save those for later because I do see our first special guest of the day just popped in backstream. You guys know him. You guys love him. It's the stat man, Ryan Detrick from the Carson Group. A couple minutes early, but we know Ryan. We know he brings the energy, so I think Ryan's ready to go. Let's go ahead and play our special guest intro for Detrick, and we'll catch up with Ryan when we come back.
Ryan,
Stat man. We love you, Ryan.
Hey guys.
Man, we were gonna do the
We're gonna get Josh to make you just right. Ryan Detrick. We're gonna actually go out and have Josh work hours making just Ryan Detrick his own special guest interview. That's how much we love Ryan. Josh, you're listening. We're getting you on that.
No pressure there. That's I would like some music to come into. I've never had that before, I think. So my own Statman song, I think that'd be awesome. So no, thanks for having me back, guys. I mean, I know Joel, you and I chatted yesterday. I said, I don't know if I have any charts. I put together a bunch of charts.
You did? Oh man, because well, first of all, before you go to those, congratulations. Yes. Well, you're our bull, but you said no matter who wins the election, I got that. You said the market's going up, and I was just going to drill you with some questions here, but I'm going to let you run through your presentation first. We'll throw some questions your way. What do you got for us?
Yeah, I'll share in a second. I appreciate that. I mean, I think I joined like 2 weeks ago, right? About 2 weeks ago or so, and I shared like the election deck that we've been sharing here at Carson Group. And one of the things that Sonu Varghese, who I work closely with, and myself were talking about, and I know you guys were all over this too, but just, that VIX from sub 15 all the way up to 22. We saw a lot of put volume coming in. We saw a lot of hedging. Our base case, we actually added equity. We manage money, right? We manage like $2.6 billion. We added some equity risk. We've been overweight, but we added some more the Friday before the election. And our rationale is once the election comes and goes, whatever happens, happens. It's all about that uncertainty, alleviating with all the hedging and all the people that are kind of getting ready for here comes the volatility. And then you look at October, We had one day the entire month move more than 1% up or down, yet the VIX was way up above 20. And we know why, because there's a big election coming and there could be volatility, but we expected that to unwind. And my, oh my, obviously did it ever. Now, let me get my charts here. Give me 1 second here.
Ryan, first of all, I am officially deeming you the Jamar Chase of financial data and stats and charts. Did you have fun watching that? I mean, I know the game didn't end how you wanted it to, but that game last Thursday was crazy.
Yeah, I mean, I guess Jamar Chase is pretty good. Problem is he can't play defense. That was the joke. We said we got to put him on defense to try to help some things. But yeah, that's I don't know, stupid Bengals. They score a lot of points, but they can't play defense. Or the games they win, they play defense and they can't score points. But anyway, it's
What I wanted to ask you before we get into your presentation was, you mentioned the VIX being higher ahead of the election. I made the argument the day following the election that part of the reason, at least the market was up so much, was just that we got a decisive answer one way or the other, because I think there were a lot of fears that we were going to see a drawn out, inconclusive results for days. So that fear subsided pretty quickly. How much do you think that factored into the rally?
Absolutely. I mean, that was a big part of it, right? Because I mean, we read the same thing everybody else is reading. We might have a fight on our hands. It might go weeks or so. You look back in 2000, it took the Supreme Court to determine the president way back then. And stocks did not do well during that time period. We're also in a recession and a bear market in 2000. So maybe you could say a little bit different scenario, but at the same time, markets just don't like that uncertainty. And then when the results started coming in, we all watched the futures. We've all seen what cryptocurrency have done. I mean, you can make some arguments when you look at some of the things that were leading going into this. Maybe the market knew. I mean, the market was not volatile in October, right? October, we talk about this, usually most volatile month. It was not. So maybe the market was sniffing this stuff out before a lot of other people, which tends to be the case, right? That tends to be the case. But it's, it's some interesting stuff. And at the same time, it's a bull market. I've been calling you guys for a long time saying that. Surprises. I forget who said this. It's a great quote. Surprises happen to the upside in a bull market. So should we be surprised? We just had literally the best day after an election ever. I don't know, maybe not. 2.5% on the S&P. I went back tonight, like just 10 presidents or so, and we've never had a jump that good on the first day after, but it is what it is. Now here's the first chart. I've shared different versions of this. I made this recently. Once an election, wrong word. Once a bull market gets to 2, they can tend to keep going, right? It's kind of like get to 65 years old. Once you get to 65, the odds of getting 80 are pretty good, right? Really good, actually. Bull markets aren't that different. So here's the 5 times the bull market made it to at least 2, like this one has clearly now into its 3rd year. The average is like 8 years. I'm not saying it's going to go 8 years, but we're just saying it's like a cruise ship. Once these things get moving, they can really keep moving. Now, here's some cool chart. I've seen people make these. I made my own. Democrat, Republican, the White House. I mean, bottom line is, yes, I'm not a really short-term trader. I know a lot of people listening to this are, but more of a longer-term investor really anymore. And yes, who's in the White House matters. I'm not going to minimize that, but stocks tend to go higher, under various administrations, under various things, various good, bad news historically. You tend to get more good news than bad news. We tend to forget the good news over time. But nonetheless, that's, I think, a good chart to kind of really put that in perspective. Now, here's ones I shared a couple of these last time with you, and I'll just go through them quickly. I think one of the bigger reasons to be bullish here was, which one is this here? Okay, the last 10 times that a president up for re-election, and I get it. Joe Biden stepped down, President Biden stepped down, but still stocks have been higher, right? I mean, the last 10 times stocks were higher in election year. Election years are usually pretty darn good, except for 2000 and 2008. Well, recessions, okay, a little different scenario. So you tend to have a pretty good run when that happens. Now, this is neat because what have we seen since the election? Small caps have soared. Value's done pretty darn well, specifically, obviously, cryptocurrencies. But we took a look back at the last time President Trump won, that first month, and that's that first rank there. Value was the best, small value. Financials, financials done great lately. Russell growth, you see energy. It sounds a little familiar, a little bit familiar with what's been leading the first couple days after these election results. But that's the first month. Look a little more to the right where we look the next year. what's really interesting is those things that led the first month after President Trump won back in 2016 did not lead anymore. Now, they were higher, granted, the whole market was higher, but they didn't lead the whole time. Now, believe me, I've come on here for a long time. Say we like small caps, mid caps, cyclicals, industrials, financials, those areas. We still do, and they're starting to really do pretty well here. But I think it's interesting when you look back that the stuff that led initially did not actually lead the entire time. So something to think about there. This is, I don't know if you guys talked about this or saw this, Financial Times. It looks at all the developed nations that had an election this year. The bottom line, including the U.S. now, this is the first time in history, according to Financial Times, and how far does this go back? 1950, it looks like, where the party that was in power lost voting share from the previous election. I mean, every single place. So it's not like, this change of power we're having in the U.S. is anything different than what we're seeing around the globe. I mean, there's a lot of countries, specifically developed countries, that are doing something very, very similar right now. I don't really have a theory as to why. We can all pontificate why, but the reality is, a lot of countries, a lot of people kind of upset with what's going on right now. So they're voting out the current party, the current administration, whatever you want to call it, and getting somebody new in. Or not always voting them out, but at least not voting them to the same degree they were the previous election is probably a better way to put that. That's a crazy chart, I think. So red wave, I guess it's official, right? I guess it's official. Republicans have the House now. So there's a red wave. That's what we call it. I don't know if it's a red wave or red small wave, but nonetheless, a very, very slim majority for Republicans in the House, decent sized majority in the Senate, obviously have the White House. You can see here red wave returns right there. Not all that great. Now, I'll be very clear. The 2001, 2002, a lot of people throw those out because there was a senator, I guess, that jumped ship mid. So if you were to take out 2001, 2002 with red waves, well, the returns do get significantly better. Obviously, it was kind of a recessionary time. I know it's cliche to say, well, without a recession, things do okay. And that is the truth. We still don't see a recession. But there's your breakdown when you have a red wave. We're not getting too in the weeds of this. People like to talk about it, but I wouldn't blindly invest in this. But it's something to be aware of. The big question is, which one do I have here? Stocks do a little bit better under a Democratic president than a Republican president. We know that historically. It is what it is. The returns are the returns. But we like to say it's not about red, not about blue. It's about green. We think Congress matters a little bit more. If you have a divided Congress, that's when things really do well. Now, let's be clear. We don't have a divided Congress anymore, right? We know that. You can see the returns there much better on divided Congress. But the House majority is so darn slim. There's still going to be some jockeying, and it's not going to be like everything President Trump and his administration wants to do. It's just going to come through. We wouldn't want that. If it were blue wave, red wave, you don't want too much power and too much spending one way or the other. I think most people, probably safe to say, were surprised by the size of the victory and the 312 electoral votes, the most for Republicans since 1998, right? So anyway, those things were a little bit surprising, but again, it's not like this huge red wave of power. So there's not going to be over the top spending and pushing things through that maybe don't always do the best for the country. That's not about red or blue. That's just about the extreme measures that each party wants to do. So we're still a little optimistic that the House is so darn close. It's going to be a little hard to get some things through. This is neat. It felt to me like every Friday's higher, and then I looked, and yeah, pretty much it feels that way. This is S&P 500 annualized is 43% on a Friday, another 35% on Thursday. Take a wild guess. The best years historically have strength late in the week, right? I mean, it is what it is. If you're willing to hold over the weekend, I think it's a clue. And I've been talking about this a while. So most of this year, Fridays were strong. And that, again, was a little subtle clue that if you're willing to hold over the weekend, that's usually what you see in a bull market. So until we start seeing some big weakness and sell-offs on Fridays, that could be a little clue, but we haven't seen that yet. We just were higher 10 of 11 months on the S&P. S&P 500, you can see here a year later, look at that, up 9 out of 10 times. All right, a return of almost 15% on average. So just interesting stats I like to look at. Just a couple more here. This is just simply seasonality, right? The worst 2 months in an election year are September, October. Stocks were higher in September, down a little bit in October, specifically because of the Halloween massacre we saw when stocks were down pretty big because of Microsoft and Meta. But now here we are, the best 2 months, November and December. I talked with you guys about this 2 weeks ago saying, hey, November is higher 11 of the last 12 months. November is the best month in election year. All these stats and things, and you don't blindly invest because of that. But here we are with the S&P up, I think 5% or so, into November, looking at one of the best ever. And then December is usually pretty good too. So we still think there's going to be some room to go. And here's why. When you're up 17.5% for the year going into the last 2 months of the year, like we were this year, those last 2 months are higher 14 out of 14 times. November's higher 12 out of 14. December's higher 11 out of 14. So this is stuff we were talking about and sharing. And this, honestly, these stats are why we added some equity risk the Friday before the election, thinking there would probably be an unwind. There'd be a chase. We manage a lot of money. I talked to other people who manage money. The honest truth, A lot of people have still been underweight stocks and overweight bonds this year. I know it's crazy to think because it feels like it's been a pretty obvious bull market, but hey, it is what it is. There truly were a lot of people waiting for the election out of the way to get in, and we still think there could be a little push into the end of this year. Which one do I have here? Okay, this is just looking at all the different elections. What stood out to me is at the bottom. The last 10 elections, 1 year later, S&P's higher 9 out of 10 times. Up 15% average. Just some context and some things to think about, as we go forward here in what we still think is a bull market. Well, last two things, I think the best 6 months. We all talk about sell in May, go away. Well, now we're in the best 6 months of the year, November through May. Yeah, through April. You can see here up 7.1% average, higher 77% of the time. It is one of those. It is what it is. But I get it because we just had a really, really strong worst 6 months of the year, up well over double digits. So what does that tell us? Well, when you have a strong sell in May period, guys, up double digits like we just did, these next 6 months we're now do even better, up 13.2% on average. Remember, it was 7.1%, but when you have a strong sell in May, it goes up to 13% on average, higher 10 out of 11 times. And just some stuff to think about here, that the strength we've seen, we are not betting against it. We've been overweight equity since December of 22, and the money that we run for our advisors, we are still there, and we're not seeing any major reason to change yet. Best 3 months of the year, we're there. I mean, it is what it is. Best 3 months of the year, we're there right now. I think I'm almost done here. Aggregate incomes continue to increase. We had the jobs data recently. We get the income stuff. This is getting a little geeky, a little fundamental. I get it. But incomes and wages and employee compensation are all growing more than inflation. And nobody likes inflation. We just had an election that was kind of referendum on inflation. We get it. But the reality is, if you look into it a little bit, most people are making a good deal more than what inflation's running. And this is just another example of aggregate income actually increasing recently, which is, hey, we think a pretty good sign for the overall economy. Oh, looks like that's it. All right, well, I'll stop sharing. Maybe I'll take a break.
Yeah, Ryan?
What do you think? What do you think?
What would make you take some chips off the table here? I mean, absolutely nothing you just showed me there is an indication. I mean, you have different. I mean, I know you talk to some of the big boys, and you have high net worth clients. What if they came to you and say, Ryan, man, I'm just afraid of heights up here. What advice would you give them?
Yeah, well, I mean, if they're afraid of heights, hopefully they have enjoyed some of these gains, because I get the question like, what if somebody's missed the whole rally? What should we do now? I'm like, I don't know, get a better financial advisor, I guess, is when I come back there, because you should have hopefully been in some of this. I mean, the stuff that we like to look at, I know you guys do too. What's leading, right? I'm an old school CMT, John Murphy, message of the markets. What's leading? On a relative strength basis, if we start to see things like staples, if we start to see parts of healthcare, the more defensive areas of healthcare starting to lead, utilities are a little bit different because they're apparently an AI play and an energy play now. So, but if you see staples, some of those low volatility names starting to show leadership, but they're not, right? I mean, just since the election, what's led? Well, the offensive stuff, your cyclicals, the tech came back, the real estate's not doing all that well relative, staples not doing all that well relative. So that would be one thing that would perk my interest, obviously. The other one that we look at, the credit spreads, triple B, we talked about this last time, but triple B spreads, corporate spreads, those things you can get it for free on Fred, St. Louis website. If you start to see more stress in the credit markets, and one of the fascinating things about this year, if you ask me, was in August when we had the yen carry trade unwind. We all woke up and we all became yen carry trade experts, apparently. And the Dow was crushed. Everything was down. It was red all over the place. Everybody's freaking out. And it was pretty scary for a couple of days there. It really was, And we looked at it and said, look at this. The credit spreads aren't really blowing up. But the other thing that shocked us was the action in the U.S. dollar. So I like to watch the dollar too. Here's more of this. The dollar was lower during that yen carry trade unwind. Now, if there truly was a massive, massive currency crisis or calamity coming, we would have said during that 3 day, it was only a 3 day sell-off, Monday, Tuesday, Wednesday. It would have been more of a bid for the dollar. It was not, right? So if we start to see a stronger bid for the dollar, that the 22, for instance, first 10 months, stocks and bonds, like the worst first 10 months ever for stocks and bonds in 22. Terrible time for diversified investors, unless you're all in energy, but we wouldn't want to do that. The dollar had its best 10-month rally ever, or at least strongest first 10 months ever. So that's another thing that Joel, that we're looking for, is strength in the dollar could worry us a little bit, credit spreads, and then just simply advanced decline lines. You know, they're making all-time highs across the board. That's something. And there's a lot of these, stocks like Amazon and Bitcoin and some other ones that are above their previous peaks right now. So if some of these big bellwethers, if you will, start to break below some of their previous peaks that they had, those can be some warning signs as well. So those are all the things we're watching. But the reality is, we're stretched, and we've had a heck of, I'm up 25% on the S&P 2 years in a row. I mean, so there is a point where we have to realize, okay, this has been really, really special. At the same time, last time I saw something like that was the mid-90s. We had another year of 20% gain. So we're not like putting all our chips in one basket, but yeah, go ahead.
Sorry to interrupt. Just a quick question for you. So I know you're awesome at seasonality. What about, and I know that we're in this strong period now for the next few months. What about post-election years? Are they generally, and obviously we're just in an election year. You've been all over how strong election years are. What about that next year on average? Is that a little bit of a like pump the brakes in terms of a little bit of a letdown in terms of the overall performance the first year after an election?
Yes, this is a great question. This is where it gets interesting, because if you have a new president, usually things are pretty good. Now, obviously, this is President Trump's second term, but there's that gap in the middle. So I don't know what you call this. But the near term after elections, you tend to get a little bit more strength, actually. But here's an interesting one also along those lines. So we talked about the idea this is now the third year of a bull market. We made it into the third year. And normally, you keep going higher to 8 years on average if you look at the last 5 bull markets. But the third year of bull markets usually isn't all that strong. I think it's like 5 or 6% on average on the S&P. So not all that strong. And why is that? Well, usually because you gained like 64% the first 2 years. You kind of catch your breath the third year. Yeah. And then years 4 and 5 actually are really strong. These are fairly small sample sizes. I want to be very clear. So that's kind of one other side to the argument that maybe we're due for some choppiness or some breaks. But I'll tell you also, the truth is midterm years are usually when there's trouble. I mean, we saw a negative midterm year in 22. The last 19 years, if you look at the pre-election year and then the election year after a negative midterm year, the last 19 times in a row, stocks were higher. This year is going to be 20. Honest to goodness, maybe we get through 25 and have, we think low double-digit gains, not quite as good as we've had, makes sense. And maybe we need a negative year. Maybe, honest to goodness, if you're bullish, you should root for and it sounds crazy, you should root for a negative year in 26, that next midterm year, because, again, stocks have gone up 20 years in a row, the 2 years after a negative midterm year. So there's something to think about there from the seasonal point of view.
All right. Well, we've been on the line here with Ryan Detrick again from the Carson Group. Ryan, we appreciate you hopping on with us. Of course, new setup this week, but we're going to keep bringing the great guests like Ryan and, so much great info, so many great charts. We really appreciate you putting that work together.
Yeah, listen, guys, I'm a fan. I'm rooting for you with the new endeavor here, and if I can help, I'll tell you what. I want a song next time, though. I'm not coming back.
Yeah, we're getting you a song. We're putting Josh on this. He's getting his own special song. He's been with us for so long. Ryan, one of our greats. Thank you so much, Ryan Detrick.
Thanks, guys. We'll see you soon. Take care. Goodbye.
All right, y'all. That was Ryan Detrick from the Carson Group. You guys know him. He's always bringing the stats and the great info and making me feel at ease about, maybe I shouldn't be as scared of heights up here. But like he said, maybe a little bit of a pullback or down year might not be the worst thing in the world. I mean, the SPY right now, to Ryan's point, is up 38% in the last year. 38%.
Is it up that much? Are we up that much in the last year?
Not year to date.
Not year to date, but over the last year. So from the November, okay, gotcha. From like the November lows, because we went down in July, August, September, October of last year. Okay, gotcha.
And then the end of last year was really strong.
Like 36. Sorry, 36 in the last year, not 38.
Year over year. And then what's the year to date return? Yeah, do we know that?
Year to date return is 26.5%.
Still a hell of a year. It's been a great year for the S&P, and we've been talking about the resilience of the S&P. Like, I mean, even look at it with all this market, volatility that we've seen in individual stocks, and yet, and weakness in the mega cap techs. And we're going to go to this just for a second here because it's important to talk about. Apple fairly weak yesterday, Microsoft fairly weak. Obviously, Tesla picking up the slack, but other stocks, the IWM, small caps, and there is some smaller names in the S&P as well. It's so bloody diversified. I mean, it is mega caps. Still 40% of it is heavy to the mega caps, but I mean, it's still a lot of other stocks in there. And it just seems like S&P just steady as she goes.
Yeah, a little rally coming up this morning too, coming back to unchanged. I just want to do a quick update here. Boom, Honeywell. So you boy, did that peak and pull back. So Honeywell, ON. If you're good at trading wild stocks, I don't know what
Coming
they
back.
just said on the conference call.
Bouncing.
ON. And Christian, if your spread's not in the money off the open, I want you to go down to the floor, yell at those market makers.
It's continuing. We're 110 on Shopify here now. So you're looking like you're going to be okay here, Christian, on this spread. You're looking good. Market has rallied overall. So what you are clearly seeing is Tesla versus NVIDIA. And we've seen this we've seen this before, 6 months ago, the opposite, where NVIDIA is going up and Tesla was going down. I don't know why that is, but sometimes these stocks tend to move a little bit opposite, not like opposite, like parabolic sell-off, but a little bit of weakness the last few days in NVIDIA on the Tesla strength, because money's got to come from somewhere. And it probably sometimes comes out of your leaders. Well, today, with the Tesla weakness, Tesla's down 10 points here now. It's continuing to leak. You're seeing a little bit of money pop back into mega cap tech. Meta, which has had a bad couple of days here, not terrible, but, with the markets holding up pretty well, Meta not participating. Meta's up $2.83. NVIDIA obviously trading green here now. We've got Amazon moving to the green here again, up $1. Apple, Microsoft. This is exact opposite of yesterday, where the big five were all trading down and Tesla was way up. Tesla down and the big five trying to go up. Google's only down 10 cents here now, so it's trying to go green here too. So don't be surprised if you see Google go green here. Again, keep that in mind. Not all these stocks moving together. Tesla kind of moving with the memesters, with the Bitcoin, with the Trump trade. And the mega cap tech's just been cool. But if you see weakness over there, that money usually always flies back into mega cap tech.
Yeah, and Dennis, to your point with the kind of momentum or even Trump trade, we can say, because, you look at DJT taking a breather this morning, Palantir down 2.5%, which for a while there, it felt like Palantir was never going to go down again. It was just going to go up every day. So Palantir taking a breather, but it's not like a sea of red out there because you have this money flowing into some of the biggest names, which, we had talked about previously this week, how Tesla's strength was really helping prop up the S&P 500 because it's become now a bigger, weighting in those ETFs. So should we do a couple more earnings reports before our next guest?
Yeah, let's jump in. There was a lot of reports here last night. Yeah. So, we can take some from the chat as well. If there's a specific stock you want to cover, let us know. Like we've pegged, obviously the major names to talk about here. We've already covered the Shopify and the Home Depots. We didn't cover, I wanted to cover
Live Nation.
Let's go Live Nation. Yeah.
Let's go to Live Nation. So I'll be honest, I don't know what the latest is on the. I know the government was trying to kind of crack down on Live Nation a little bit. Seems like no movement there has really been made. Of course, Live Nation owns Ticketmaster as well. So the company reported EPS of $1.66. That was against the $1.60 consensus. Then you had sales come in at 7.65 billion, missed the 7.7 billion estimate. So mixed bag there, but I believe the guidance was pretty strong. Then you had some analysts coming in with some upgrades this morning. Live Nation price target raised at Oppenheimer, at TD Cowen, at Benchmark, at Guggenheim. So the analysts were liking the report. Stock is up 6% today, up to around $130 a share.
New all-time high.
And it also shows too, Live Nation, people are doing things, right? People are still spending, which is amazing to me that this is still going on, but people are still spending money for concert tickets, very discretionary, right? When you go out and see music and so forth, the price, if any of you have gone to a show recently, it's not only the price of the ticket, but, it's the concession and everything else. It's just, it takes a lot of money to go to some of these events. I went to a Giants game a few weeks ago, and it's very expensive to bring a group of people. One other note too, so you mentioned, I think Viking got an upgrade. That's cruises yesterday. And I know Joel's going to get mad at me for this one, but because these stocks have been on a crazy run. But if you look at United Airlines, UAL, and Delta, both of these stocks, and I can't explain, I'm just telling you the activity on the tape. Both of these saw further call buying in both of these names. So maybe it makes sense to kind of like zoom, use that weekly chart, but I just could believe that we're seeing upside call buying in both United and Delta too, which are in that, wheelhouse of, consumer discretionary spending.
Wow, and look at CCL and RCL. I mean, this has been an everything rally. Just going back to the Live Nation real quick. We're in absolute no man's land. So if you have a target at the pre-market high at 134, but I got a sneaky level here. I'd like to let's see if we hold this 130. Since you had that spike up, that's been the low in a couple different 15-minute brackets. So keep an eye. The buyers or whoever's been shortening it above 130 and are been bringing it in at that level as well. So there you go. Good level, Live Nation, off a shorter term chart.
Should we talk some chicken real quick?
Yeah, chicken. You calling me chicken? Chicken.
I'm calling you chicken, Dennis. So
Tyson Foods.
Tyson Foods reported earnings this morning. EPS came in at 92 cents. That beat the 69 cent estimate. Sales came in at $13.56 billion. That beat the $13.39 billion estimate. The Q4, let me try to find the guidance. Initiate strong fiscal year 2025 outlook there. So you have the double beat, a strong outlook for Tyson. I guess people are still buying the frozen chicken nuggets out there. Stock is up about 6% or $3.50 this morning.
Big move here for chicken stock. 5.8%. We had the big down move in September from 66 to 58. I don't know what the 50% retracement is, but it looks like it's around here. So never like buying, when you've got a downtrend and then you pop back half of the move from the last, 2 months of sell-off. I never like buying into that. Rarely do you see it go all the way back up. So I think I'd be more of a seller than a buyer of the chicken stock.
Yeah, this is a big move here, and you just have so much going on at the 62.5 to 63 area. You had a triple top back in September, just not too long ago, a few months ago, 3 highs in the same area. And then Dennis mentioned that 50% retracement, that whole move. So let's see what happens he did hit 63 in the pre-market. So for me, let's see. I mean, if the seller, if you can catch and hold a bid here above 62.50, break out. But man, a lot of resistance there, both the dailies and the longer term 50% retracement. And then what's the other one? PPG? No, it's not PPG. PPR? What's that other chicken stock?
PPC. Pilgrim's
PPC.
Pilgrim's Pride.
Huh. That's at an all-time high, and it's not getting a look here. Pilgrim's Pride.
All right. Let's talk. I mean, we were talking earlier about the momentum trade kind of losing some steam here. So some other stocks that have had momentum that I want to talk about. HIMS here. HIMS closed up nearly 20% yesterday, now down over 3% this morning. And frankly, I'm not exactly quite sure why this stock was going up so much, other than maybe it was just got swept up into these like message boards and kind of meme traders. There's really, to me, I was looking into some of the numbers yesterday during the move, and nothing stuck out to me as any fundamental reason necessarily. I know they're trying to do the weight loss thing and GLP-1s now, but I don't know. I mean, this move has been crazy, but giving up some of those gains this morning.
Christian, any comments on this one? This is like a Christian chart.
Nice. I have been watching what's been going on overall with the whole obesity type of movement in terms of these drugs. And it's tough because, as you mentioned, like HIMS does some other things too, like in wellness and so forth. But same thing with Lilly. They've got multiple other drugs and so forth. But if you look at this Lilly chart, and that's one thing when we saw that VKTX announcement, some of these stocks that have been trading on this obesity, do I make a joke here that they're a little bit too overweight? No, maybe I'll stay away from that joke. But I just think that they're kind of they've lost their upside momentum a bit, and they've been on such a big run that I think that there's a lot priced into the obesity type move because, and then the other one is what Novo Nordisk too. So, even though these things will kind of pop a little bit, on some of the announcement, like VKTXs, there wasn't a lot of follow through on that name. So I would be a seller of Hims. And just as you said, AB, I don't know the reason why, other than just pure momentum, that it ran up like that. But I would be a seller into that strength. And
this is also a retail darling. So don't be surprised that Hims even separates when you see GameStop and all these retail darling names going. Hims is right in that category. So I think a lot of this move probably up is a little bit of the excitement of the retail trade being back on. And this is one of those that they talk about on the message boards and the Reddit boards and the Discord rooms. It's all over the place there. It's a social media darling here. So I think it probably is lifting. I wouldn't be surprised selling off today with a little bit of weakness in the GameStop and the social media trade.
I mean, it's interesting because it feels like we've been through this a couple times now over the past few years, where you look at your stocks like a Hims or an Upstart or something where they got momentum, the share prices keep going up regardless of if there are fundamentals to necessarily back that up. And it's you just don't know like how long they're going to run. You do like, I feel like pretty confident that eventually Hims, Upstart, some of these other names are going to retreat and come back down. But I have no confidence or conviction that that's going to be today or going to be tomorrow. And they could easily double or triple before they even come back. So like, I don't really know what you do with those names.
They're tough. These are some of the toughest things to trade. And I know people are attracted to popping in, these names and chasing the biggest mover in the stocks up 20%. That's the one I want to go in. I mean, I've been in this business for 25 years, successful, and profitable every single year in my trading account in those years, mainly because, I'll trade that kind of stuff, but it's more for fun. What I really know bread and butter is like slower S&P centric names where I can control the risk, where I can get in and out with, even a little bit bigger size easily. So, I like the liquidity of the big mega cap names, like I've said before, trading Bank America, even trading boring Coca-Cola. I trade that almost every day because it's more predictable. Like today, a day like today, when everything is starting to show a little weakness, Coke's probably going to show a little bit of strength. It's just a quiet, simplistic trade. You get into these Hims, you get into the GameStops, you can make money really fast, but you also can lose money really fast. So that stuff's hard to trade, AB.
So Dennis, I have a question for you.
Yeah.
If all these, I don't know what to call them, meme stock, all these kind of like companies, they're kind of, like they don't have great fundamentals. They keep going higher. All these kind of like, we'll call them shitcos. We could, we're on our own show now. Why do mine not go up? Like I'm looking at Celsius stock and I'm like, look, you guys are running every other stock out there, regardless of if they have good growth or fundamentals. But then mine, they're like, no, those ones are still bad. The only ones that I
wow.
You want to know, and this is such a fantastic question, maybe the question of the week, and Christian could probably answer this too, is that the stock is just in such a heavy downtrend. There's been absolute no break of trend here, maybe for a day in October where it started to show some life. And I tried it from the long side, but then it started to leak there again. So the momentum guys are always ready. Like when you turn, you start to hook, I'll try from the long side, but if the hook fails and starts to leak again, then I'm out. Now, again, Celsius at a certain point in time, valuations are actually going to move from a growth stock to a value stock. And I was saying down at $20, it starts to get actually probably attractive from a valuation perspective all of a sudden. So it's not that far from that. But you've got to really identify, you don't want to be like looking at charts. And I asked this question to Twitter last night. I was like, give me, your trashy stock that you think can turn around. And two people were handing me Celsius, but people were handing me Moderna. People were handing me, these stocks are in death.
Oh my gosh,
right now.
Moderna.
Like Moderna's going down every single day. There's no buyers in there like right now. It's just a mess. What you want to see is stocks that have been quiet for a while that aren't trending down, but maybe no trend and starting to look like they're lifting a little bit higher. I think this is Christian's specialty here too. Like Christian, on a stock like Moderna or Celsius, you're probably never looking at those from the buy side, correct?
Never unless, and like this is and again, it's a great question by AB. There has to be something, there has to be a story to that changes. A lot of times for me, it's earnings. And I was watching when Celsius came out for earnings. I actually put on a flyer trade. I put on, a call spread because I'm like, hey, if they say something positive on the earnings, the stock's going to pop. but they didn't do it. And the earnings was not very good. And it actually, like, I think I have to just go back, from a week or two ago, but I went through the earnings and I was like, there's nothing really positive in here. So I think, stocks can turn, and they usually do it on earnings. If they say something, if there's some type of catalyst that comes on earnings, if they're turning things around, the stock has the ability or the chance to do that. And something like that could get it going. But, that was a good example where I was like, okay, this has been such a dog, but I still see Celsius in the gym. I see people drinking it. So I was being optimistic with it, saying, hey, maybe that there's bad news that's been priced into the stock. But you listen to that earnings, and there was nothing to get excited about there. Same thing with Moderna. Like, you go through and you listen to their earnings and say, okay, maybe they've got something new that's going to be a catalyst for the stock. And I didn't find that. And I think that's one of the things that I go back to, is that, number one, so I've got an earnings list of like over 100 names, that strong earnings gap names. Those are the names that I want to be in, because they have good stories about not just like a good story that, that's floating around, on Twitter, but they have a good fundamental story. They're executing, right? And that as much as I rely on technicals and taking targets and entry prices using the chart, it's really comes down to the fundamentals of whether the company is growing their earnings.
Or they have any earnings in a lot of the cases. But coming into some monthly support here in Celsius, if you want to take another poke here, you did back in late 22 and early 23. The big boy stepped up at the $26 area. You're just trading under 27. And then also I look and I want to see like when the volume is gonna taper off. And man, it's coming down a little bit. It had a big volume day on the 6th when it sold off. It was down $1.60. I mean, there's got to be a point where everyone sold that wants to sell, and you still so, but not yet, not a turn. But keep an eye on this lower $26 area for Celsius Holdings.
Okay, so AB is having a mic issue here, so we're going to bring in our special guest here right now. Give it up, Dr. J. John Najarian coming on here right now. I don't know if we can roll that intro. AB, roll the intro. We've got Dr. J. John Najarian here right now. Maybe camera issue, but that's okay. Dr. J. John Najarian, how are you?
I'm doing fabulous, guys. You guys are in good voice this morning, and I'm delighted to be here. I'm not sure why the camera's not on. Let's see. Camera. Oh, that's why. Let's see.
See if we can get her working. There's a
there he is.
There he is. There's Dr. J.
It's been a long time just a little bit so I can be in the sun too. So I
just had to close my blind. This time of day, the sun starts nailing you and coming in here. So John, what have you been up to? We haven't talked to you for a while here. We've had you on a couple of years ago on PreMarket Prep, but it's been a while here. How are you doing? What you been up to?
This is let's see. I'm in Nashville. It's my 5th keynote in 6 days.
Oh my gosh.
So a lot of stuff going on. Let me see. I keep trying to get into the sun here.
Somewhere. You look beautiful.
Oh yeah. Okay. Yeah. Right. But what have I been up to? I've been trading a lot. Just like you guys, I had some trades on just on the outside chance that Ms. Harris would be elected, but 3-1 I had trades on for Mr. Trump, the former president, to be elected. And they have exploded. I needn't tell you guys nor the audience how big that. I mean, shoot, literally, when you guys look at Tesla, 5 days ago, Tesla was $250 a share. Yesterday, it hit $350. Elon Musk was making on average about $15 billion a day from that run because he's got 715 million shares. I mean, just a crazy amount. And anyway, I think there were a bunch of trades there. Coinbase, MicroStrategy, Mara, Riot Blockchain. Those are, some of the crypto plays, because we're going to have the first crypto-friendly administration in history. Remember, it's only been around since 2009.
Yeah.
And now we've got an administration where I don't know if it's the guy from Robinhood that steps in here or who it is, but he's going to put somebody in charge of the SEC who's not a complete dipshit, like Gary Gensler is a complete dipshit. I blame Gary Gensler for everything from FTX because, you know, you don't get to block every ETF from coming out, knowing that if we had ETFs, Sam Bankman-Fried or any of the fraudsters that were out there would not have been able to say, oh, I was doing an arbitrage between this, you know, the Bitcoin security and Bitcoin. Because with an ETF, it's literally, you know, like that. And you get a few pennies here and there, but you don't get, oh, it's $4 over the spot Bitcoin or $20 under spot Bitcoin. And somebody can pitch the idea that, oh yeah, I'm doing arbitrage. That's what I'm doing. I'm not really stealing money. I'm doing arbitrage. So I think just by him burying his head in the sand, it impacted a lot of us. And I resent that. And that's why I say he's a dipshit. And luckily I don't have a brokerage firm right now, but I will when Trump goes into office because we've been building out a brokerage firm. And I wouldn't be happy saying that he's a dipshit, knowing that he'd come after me, but can't come after me now, guy. So,
John, so again, you know, this administration, to your point, which is excellent, is going to be our first administration that is crypto friendly here. We see Bitcoin, obviously, the knee-jerk reaction much higher here. But if this administration's coming in, maybe this is just the beginning here for crypto. I mean, we see 88,000. We get a little dip here today. Some profit taking along the way is normal here. But you're still saying probably, you know, crypto probably looking pretty good under this new administration.
Oh, yeah. And what I'd emphasize to the men and women listening, the guys I'm talking to on this podcast already know this, guys. But to those of you who don't know what it's like to have an administration or administrations, including Trump's first administration, where Bitcoin got where it did, despite the fact that it had absolutely no support. And despite the fact that we were driving innovation offshore. The Winklevi left. They're friends of mine. They left. And they didn't leave for tax reasons. They left because they couldn't get regulatory clarity. And instead, it was just going to be enforcement, regulation through enforcement. Now, you're going to have support. So if we got to, what did we get to before the old high was 71,000 or whatever? If we got to that with no support, where are we going now that we're going to have support? Now that American innovators aren't going to Malta. They're not going to Zug, Switzerland. They're not going to many of the Dubai and so forth, many of the areas where they're fine, but we lost innovators. You don't get them back. Will they offer their services in America? Sure. But then they're just clipping coupons. They're just making commission dollars. Wouldn't we have rather had all that innovation here? Well, under this new administration, we will. So we won't lose Coinbase. We won't lose Robinhood. We won't lose all these other guys unless perhaps Gavin Newsom gets crazy and decides to tax them out of existence. And then they say, okay, do I go to Florida? Do I go to Texas? Do I come down with John and go to Puerto Rico? Maybe. But hopefully they don't drive them offshore like I said previously they have.
We're on the line with John Najarian, co-founder of Market Rebels. You all know him from his option talk, his option education. John, you talked about a lot of trades that you entered pre-election. Entries are one thing, right? Exits are another. Now, I assume that you're on the call buying side or spread side of things, maybe to catch a little bit of decay. Never really heard you talk much about technicals. What do What do you use for triggers on some of these issues for exit points?
Well, and it's a great question, Joel. You guys are a lot better at technicals than me. I have a good couple folks on our team that are pretty good at technicals, but specifically what I use are the unusual activity gets me into a trade, for instance. They're buying like Friday. They were whoever the anonymous they are, because I never know. But whoever they were, they rolled their 20,000 February 240 calls in Tesla. They rolled those up to 44,000 of the Feb 290 calls in Tesla last Friday. So that's obviously a roll. They took profits on the 240s, rolled up to the 290s. So that would tell me stick with the trade, Joel. Luckily, it popped to 350 yesterday. And then if they start taking those trades off, that's when I exit. So my trades are, I'd say 95%. Every once in a while, I'll go with just my gut. But 95% of the time, I am entering the trade because the fast money is buying, and whether it's call or a put. And then I'm exiting the trade when they start taking it off, or if they don't roll. Because, for instance, let's say it was expiration and they hadn't traded out, they hadn't rolled out to a further expiration or anything. I'm just out unless they have given me another reason to stick with the trade. So I pay attention to technicals from smart guys like you. And I mean that because that's usually the strike price that I'm selling. In other words, if you tell me, hey, John, there's resistance above here at, again, Tesla, 350, 352, whatever it is. There's resistance up here. Any of the calls I own, I would be selling calls at that resistance that you guys called. I didn't call it. You guys did. That doesn't mean I'm shunning the responsibility. It just means I think you guys and technicals do work. That's not my primary driver. So I use that instead as a target. And then that would be the strike where, I would be selling calls. If this was a call spread, I would be, banging out calls up at resistance. Because, like I say, I am not the technical guy.
What do you use? Do you like the weeklies? Do you go give yourself a little bit more time? Do you do the monthlies? Or it just depends on the scenario? And then also, I'd like your comments. Are you messing around with the zero DTEs at all?
I'm trading whatever the smart money is trading.
Okay.
So, and I mean that. I'm agnostic. If they're trading zero DTE, I'm in zero DTE. And I love those trades. If they're trading a 3-month out option, I'm in that. If they're trading a 2-year out option, I'm not out there because I have like 5 stocks that I hold forever. Apple, Tesla, NVIDIA, Google, Microsoft.
Not a bad portfolio. I like that portfolio.
Those are the only stocks that I own outright, other than, occasionally a flip here or there. And then I just write calls against them because, as you guys know, if I'm writing calls against those, I can take that portfolio and make somewhere between 17 and 25% every single year just selling upside calls. And then you get long-term capital gains, which now doesn't mean anything to me anymore because in Puerto Rico, we don't have capital gains tax, which is lovely. That's why you guys should all be there. But if they're trading zero DTE, I love that because I'm driven by big trades. So I need at least 1,000 contracts traded very quickly. And we've got computers down in the co-located in the data centers of the various, the NASDAQ, Carteret, New Jersey, or Mahwah, New Jersey, or wherever, for the New York Stock Exchange, for the NASDAQ, for the SIBO, whatever it is, CME. We're looking at where that fast money hit because there are 14 million quotes a second. It's too fast.
Yeah.
So no human eye sees what really happens. Instead, the computer sees it, signals it to us. We break it down, And then we probably put on close to 30 trades a day based on that unusual activity, bullish or bearish. And probably 2 or 3 of those a day are 0 DTE. They're options that are, going to turn into Cinderella or the pumpkin, whatever, very quick.
So John, I mean, and we talk, these markets like Tesla, like take us through, you were talking Tesla originally here too. And I look at something like this and say, okay, if you're in it, the exit is always so difficult. I mean, the stocks went from 250 to 350 in basically a straight line in 4 days. Like, let's say you catch and get on the right side of this on the options. How do you exit these trades? Like, are you just like taking profits, scaling out? How do you exit?
Sure. And it's a great question, Dennis. My hard and fast rule is that, as we all know, we don't trade 24 hours a day yet. And in the future, we might trade 22 hours a day if the New York Stock Exchange, gets that thing through that they talked about a week ago or 2 weeks ago. I cut my losses on options at 50% drawdown. Everybody has a different level. If I pay $2 for an option, I'm out of it if it goes to $1. What if it comes back? That's the worst thing that could ever happen, because now you're going to let all of them run. And the next thing you know, you're pumping them out for 25 cents. So I cut my loss at 50% on options, not on stocks. And then on gains, like what we're talking about with Tesla, when the option doubles in value, I take half the position off. And now I set a mental stop, usually just a couple dollars under where I exited that trade. If it keeps going, great. We all know you don't go broke taking a profit.
True.
But now I've got all my money off the table. The option doubled, which means, of course, I have all of my money off the table. And am I playing with the house's money? Well, sort of. As long as it's in my account, it's my money. But I have my initial investment off the table. And then what I do is just keep layering in calls above the market. If it's a call trade, if it's a put, I'm layering in puts below the market against my initial entry. So when I do that, I find that it keeps my discipline. It means that I don't very often hit huge home runs, which is okay with me. I want to swing for singles and doubles. I rarely even swing hard for a triple. And when the stock gaps up, that's why I mentioned 24-hour trading or 22-hour trading. When the stock gaps up, yeah, I'm really happy, because that's one of the only times I'm going to see my options go from $2 to $16 or something like that, because otherwise I would have taken half of it off at $4 because of my discipline. And then it starts to run, and, I'm cursing myself for, taking any off. But again, it's that discipline, and you guys know it, because you wouldn't be in this business as long as you guys have been in it. I've been trading for 43 years. I wouldn't be around 43 years if I didn't have discipline. Yeah. And that's the single biggest thing. My dad taught me that he was a transplant surgeon, not a trader. But he said, I can teach a monkey, John, how to do a transplant. He said, it's not that hard, but it's knowing what to do and when to do it. That's the discipline that you have to always have. And so my discipline is cut the loss at 50%. It runs, take half of it off, keeps running. I just keep staying with the position as long as the smart money that got me into the trade is still in their trade. Now I'm just layering in calls above the market, and eventually either it expires or they roll out to a further expiration.
John, do you look for simultaneous stock trades when these big option trades go on because of a hedge? And then my second question, I know we're coming up on the open. Now, I know Pete was on the floor with me in the S&Ps back in the day. Were you at the SIBO? Were you on the floor, guy? You're at the SIBO, right? Learning those option markets. Well, next, you can answer that question. Next time we get you on, I want your best floor story, because our people love floor stories, and they're not around anymore. So go ahead and answer those, and then we'll let you get on with your day heading up to the open here.
All right. Well, what was the first question, though, Joel?
I lost it too, Joel.
I'm sorry. The first question was looking for stock, like a big option trade goes off in Tesla.
Right.
Yeah.
And that really is. I'm not just being that guy when I say that's a great question. It is, because that's why I don't care about options trading on the bid, quite frankly. Because, for instance, when an option trades on the bid, for all I know, it's Elon Musk putting on a covered right. He has a shit ton of stock, which we already described. What if he sells 20,000 calls and he sells them on the bid? Does that mean he's bearish? No. It means maybe he needs some money for a new jet or whatever. But I love always having that matched up, the stock and the options. And every once in a while, you get a really slick trader at 0.72 or at one of the big hedge funds that is buying puts and buying stock. That's a synthetic call, as we all know. You're buying a put, everybody would say, oh, that's bearish. Yeah, but if the stock traded with that put, it's a synthetic call. They're hiding what they're really doing from the newbies or from the people that don't really know. So I love, and we always look at, did any options trade at the same time as that big stock print? And if it did, I want to know what it was. Because again, could it be a covered right? Somebody big came in, bought the stock, sold the calls. That's why we co-locate in the basement of these data centers, because we need to know, was it bought on the offer? If the option was bought on the offer, we all know you can get a leveraged return. If it trades on the bid, all you can do is capture that premium. That's it. End of story. Full stop. You made $1.10 if you're right, or whatever you collected in premium. Great. Not saying that's bad, but I want to trade with the guys that are shooting for 10x, 20x kind of trades.
Okay. Excellent answer. We'll save the floor story for next time. Thank you so much. You guys know John Najarian, Market Rebellion, coming up with his own clearinghouse. John, we're gonna
talk about your book too. Give him a second to talk about his book. Okay. I see you all the time. That's not an option. I see you all the time. So quickly, where can people get your book?
Well, and you still get the book for free, folks, but I don't run the post office. So it's $8 shipping and handling. So if you go to itsnotanoption.com, you will get the book for free. I guarantee you. And if they try to charge you for the book, just tell them, hey, that's not the deal, because they don't, by the way, they don't screw around. But we've done 470,000 of these books. My brother and I have written 4, and some 80 some odd % of them are given away in this manner, because we know that, like when I started, guys, and then I'll leave you with this. When I started, we did 400,000 options a day. That was in 1981, 43 years ago. Now we do, I think it's averaging this year, 49 million options a day.
Wow.
The reason for the growth of this industry is people like you that are learning about it from people like Joel and Dennis and me. And to the extent that you guys learn about it, it's better for all of us. It means there's entries and exits are better, and it's far better control of your money and your risk trading options than trading stock, but you do need to understand how to do it. Just go to itsnotanoption.com and you can get the book for free.
Awesome. Thanks so much, John. Appreciate you taking the extra time here. I know you got to get to the open. You sound like you're busy everywhere here. So thanks so much for taking the time. We want to have you back real soon. Take care.
Sure. Thank you, guys. Be well.
Thanks, man.
Okay, let's get Dennis. You getting flat there? Do you want?
Trying to get some stuff here at the open. There's some wicked action here right now. You're seeing, the rotation that we kind of anticipated, that mega cap tech. If it's coming out of Tesla, it's probably going to go into the Metas and the Microsofts, the Amazon, the Google's still red, the Apple's barely red. But the predictable rotation, and that's what I trade really. John has his strategies, which are absolutely, excellent here. He talks, a lot about, having those edges. I mean, my edge itself too. Joel's the technical guy. I'm not so much a technical guy, but I'm a relationship guy. And what I try to do is identify new relationships and try to take advantage of those. And right now, the memes trade, The Tesla weakness is giving
Is
Microsoft,
there any news
Meta,
on Tesla?
Amazon.
Is there any news on Tesla?
There's news on Tesla every day, but this is just profit taking here, Joel.
Yeah.
I mean, the stock is up so much so fast here. I can go to the message. I can go to the news. Just there's always Morgan Stanley. So Deutsche Bank, just from today, Deutsche Bank on Tesla, to the victor be the spoils. They have a note out there. I did not read this note. They reiterate the buy rating, $295 price target, so bullish note. Also, Morgan Stanley, Adam Jonas today reiterates his overweight with a $310 price target with a bull case of $500. Jonas saying Elon Musk's entry into the political sphere has expanded investor thinking around Tesla's fundamental outlook. Is the re-rating temporary, or will Tesla begin to play a greater role in the U.S. renewable autonomous industrial complex? Over the past week, investor perception of Tesla's CEO has significantly evolved. Elon Musk's public support for President-elect Trump has vaulted Tesla's CEO to be considered a powerful voice in the incoming administration. So, I mean, this is all off this, but Jonas is saying $500 in play. So
that's
really,
bullish. That's bullish.
Both notes that I see today were bullish notes, and we know the analysts chase price to sir. But Jonas has been bullish for Tesla for a long time. So he's saying 500 in play. The reason you're pulling back is it's just too much too fast. But even as we speak, Joel, even as we're talking here right now, buyers are starting to reemerge here again. It's very difficult to keep the big stocks down here right now. And when they get hot, they get hot.
Yeah, especially when you go to yesterday's low. I didn't get a chance to call it out for you guys. Sorry about that. 336 was yesterday's low. You're sitting there on the bid, you get peppered, and then it goes to 335.30. You're like, I don't know about that. But you did get a little pop, but you got to keep an eye on that area because it really opens up to the downside. So the bulls made a successful defense of yesterday's low on the first attempt. Let's see what happens if they get it back there down again. But that was a quick move down, and now fighting to get back in the 340 handle. S&Ps here, they just had been steadily climbing in the pre-market. We have taken out the pre-market high. Now things get a little bit interesting because you don't have anything much on the upside as far as resistance goes. Your intraday high was 45.25. So if you're looking for another 10 points there, and then the actual all-time high that was made in the Globex session at 53.25.
All right. Well, as strong as the market has been since the election, you do have your pockets of weakness here. And Plug Power, I mean, all these clean tech, clean energy, that trade has obviously not gone how you want it to go if you're a bull. Plug Power reported earnings this morning, EPS loss of 25 cents that missed the loss of 24-cent estimate. And then sales came in at 173 million. That missed the $210 million estimate there. Double miss. The revenue guidance came in below expectations, but you're seeing just how low the bar is for stocks like Plug because you got the double miss and lower guidance, and the stock is only down about 2% today.
I mean, this is just stories that are just completely broken. So you have stories that cool off. You have stories that, get hot all of a sudden. I mean, we had this meme, trade come in and they're buying, stocks that have beaten up. They're buying stocks that, haven't seen a lot of life. And they're not even touching a stock like this. And that's just showing you how, broken the stock really is. I mean, it was the storied stock back in 2020 when it went from $4 to over $75. Holy, never knew it went that high. It's back down to $1. And again, when stocks fall more than 90% off of the highs, they rarely come back. It's like, we've given those stats before. It's tough to come in. It's one thing to be down 30, 40, 50% from your highs, and it's overall market, and the market's been tough, and this was a Momo name, and eventually, but when they start losing, 95, 98% of their value, almost, it seems like inevitable that these things, a lot of these companies, not all of them, but a lot of these companies do indeed go bankrupt. I just don't think it looks good for Plug Power at all. Jumping back, let's just keep going here on the earnings parade. We're going to do a few stocks here, and then I'll jump into some other things. But C Limited, SE, if you can go grab the earnings for this one here, this stock is in blast-off mode here. And here's a stock that probably fits the description where it was almost down 90% from the highs, $359 back in the bubble of 2021, down to $34. So yeah, basically down 90%. But this one's showing life. This one's on the comeback trail here. This one's up a lot today, up 18% here. AB, C Limited, SE, what were those earnings?
Aye, Captain. We had EPS came in at 24 cents. That missed the 25-cent estimate. Sales came in at 4.32 billion. That beat the 4.07 billion. They said they're on track to accomplish their 2024 full year growth guidance. So mixed report all in all, with the slight miss on EPS. And then you had the beat on sales there. And I mean, yeah, to your point, Dennis, I mean, it's basically C Limited and Carvana are the two stocks that come to mind that actually went down 90+% that have come back, because, you know, you buy 100 of those, you might get lucky on those two, but the other 98 ain't going to go your way.
Yeah, and it's tough. I mean, it's a tough business, you know, and as a trader, even myself, I mean, everybody comes into this business and they're always like buy low, sell high. When you start, you'd always think about, oh, like, you know, I was sitting there, I can remember, you know, a number of years ago, sitting there with my buddy Lance, and, you know, we're just like, this was like a number of years ago. This was back like when I was in the Bright Train days, but it was in the early morning. I always watched CNBC before I went into the office, and I was, you know, staying with my buddy Lance a lot of times before I was married. And I'd have CNBC on, and Lance would be looking at the screen. He wasn't a trader. He's just, you know, watching it because I have it on. He's like, oh, Denny, that one's down $15. You should go buy that one. That one will come back. Or that one's down, you know, 10%. That one will come back. Go buy that one, Denny. He was always naturally looking for the stock that was the weakest to think that one is going to be the one that comes back. And really, that's your natural human tendency right there. It's to always look at the weakest thing and say, yeah, that's the one that I got to get in because that's the one that's going to come back the most. And you got to knock that out of you, because really in the stock market, it doesn't work that way. You know, we learned so much, you know, obviously from William O'Neill over the years in the trades, you know, that stocks that go high go higher. You know, buying strength instead of buying weakness, you know, is a better way to trade. So it's like natural to like want to go buy the plug power, want to buy the dog that's down. You know, and Carvana did have a trade, you know, obviously got down way down there and came back, but so many of them don't. So, you know, to Christian Frommer's point, which is why Christian's coming on as a regular here now. We've known Christian for so long, and he's so good at trading. He's not even looking at anything in those downtrends. Brian Shannon on yesterday, not even looking at anything in those downtrends. You know, those stocks are just beat up so bad. Wait till they turn. Wait till they show some life. Don't be the hero and try to catch the falling knife, because that's how you lose a lot of money.
Okay, just a quick update, Christian. I just asked him about that spread, and man, these guys are tough. Even though it's well into the money, the 94.102, he got out at 7, and the maximum value is 8 on it. So, man,
still
those
couldn't
guys
max it out.
Yeah.
Yep. Because you've got 3 days left on it, because he's probably on the. So I mean, there's still that possible that there's a rug pull in here. So they're not going to let you out on the max. Nope. Because there is the possibility of that rug pull here. So, you know, it's tricky. I mean, if we were on Friday right now, he'd probably max that out. But we're not on Friday. We're on Tuesday. There's 3.5 days, you know, basically 4 full trading days here left. So it's difficult. But good trade again, Christian, you know, bringing us Upstart. Obviously, he did that trade. I mean, he's got back in the Affirm. I mean, you don't get a lot of traders better than Christian. You know, he posts his results every month. You know, I've been doing that as well. It's so, you know, when you actually do that and you say, you know, talk the talk, we'll walk the walk, we'll show, you know, your results there. If you're really the great trader, you know, and you're trying to help other traders trade, you know, show the stuff. And Christian and myself, you know, I started doing it too once I left Bright Trading. I couldn't do it at Bright Trading, post my results every month, because I'm using prop money. So I wouldn't even know what those results are. You know, you're not using your own money. So it's a little bit, you know, disingenuous to say, oh, you got a $50,000 account, and if you made 300-400 or 1,000 or something, no, it's a hypothetical situation, sure, but I'm up 600% on my money. Well, I'm not really. I was using prop money, so it's not really, you know, fair to say that. But at this point in time, I'm using all my own money, so I can post those monthly results. So I've been doing it for about 2 years here now since I've left, and Christian's done it for a number of years here. So just a fantastic trader, Christian Frommertz. But again, to the point I was just making, he's always buying strength, not so much, you know, or looking for the turn and the breakout, not so much looking for the stock that's beat up the most. It's so hard, though. And I do it too. I mean, we all do. And Celsius, sorry, AB, is down here again today. I mean, I do the same thing. like natural human tendency for me is to like, oh, buy what's weak. Even my Bristol Myers, that one worked out. But, Bristol Myers was in the doghouse when I bought it, but it wasn't a trade. I threw in the long-term investment because I liked the fundamentals there, and I just thought it got too low. So, you do break the rules. But really, as a trade, there's no business buying a stock at a 52-week low.
Boy, oh boy, what about this ON? What a wild child here, man.
All over the place.
Yeah. But if you're using the previous day's high, you got a decent trade-off there. 53.72 yesterday's high. You just went to 54. Quick update that Home Depot did pull back off the open. Someone said they bought the exact low at 408.50.
Ooh, in our chat?
Yeah, someone in our chat did that. Just look to see. I mean, there was a big move off the open. If you're holding this, I don't know if you were trying to cover a short, or it was a long, but you've had about an 8-point move. So you want to see it get back halfway, on the move. And if not, then maybe you'll go back and kind of fade back towards the low. Honeywell, real quick update. It's just too much, too fast there. With the Honeywell pulling in. Christian said,
that was just, and again, that was a ridiculous move this morning. And sometimes I wanted to comment on it, and then we moved on too fast. But I was going to say, if I was in this thing, I was going to say it honestly. I was going to say 245. I was like, this is just too much, too fast. Elliott is, huge, but again, this isn't a huge turnaround story here either. So like a lot of times Elliott comes in and the stocks pop 7, 8, 10% because these stocks are in the doghouse and there's people short the things and they're all caught. You're not getting much of a short squeeze off of Honeywell. The thing's near 52-week highs and is making a new all-time high here today. It's, surprising that they took a position in this one because they typically don't. But the algos are automatically seems like programmed to buy any Elliott purchase up 6, 7, 8% because they automatically think they make money. But this is, this is a little bit different story. A horse of a different color if you follow the Wizard of Oz. Honeywell 240. It's not the same as this Love and all these other ones that they typically come in Pinterest that are really beat up. So to just say this is going to go up 7, 8% because that's what they do when Elliott discloses a position, I think this one's a little bit different.
Okay. All right. AB, in the background there, were there any stocks on our list that we wanted to cover?
Ticker time.
Ticker time?
Yeah. There was also, interestingly enough, when I came in this morning and I was looking at my pre-market prep or my pre-market screener for the ticker 4, which is Shift 4 payments reported earnings, and then Fiverr were right next to each other on the thing, which was funny just because it was 4 and 5. So let's do 4 real quick because they reported earnings, and then we'll get to ticker time.
Sure.
I don't even Fiverr's ticker is FBR. We can look at that one too after this. All right. Anyway, Shift 4's EPS was $1.04. That missed the $1.07 estimate. Sales came in at $909 million. That missed the $971 million estimate. Mixed guidance there as well. So you saw the stock. I mean, this was kind of wild off the report. Joel, I'll let Dennis give his thoughts, and then Joel, you do the technicals on this because again, it was kind of wild on the report.
I mean, the stock shift 4, has been coming back here. This is a little bit different story than the Fiverr, all the way. You got a stock that's sitting up at all-time highs, so completely different stories here. Stock making new all-time highs. When stocks make new all-time highs, you got no business shorting them. As much as you don't have any business buying a stock at an all-time low, you have no business shorting a stock at an all-time high. Just my opinion. If you're good at shorting all-time highs and you make money every time you're doing it, continue to do it by all means. But I think, traders for the most part lose a lot of money trying to short stocks making new all-time highs and buying stocks making new all-time lows. It opened low, opened almost near the lows, and they bought it right back here. So here's another example of a stock that's just in a hard uptrend, gets a dip immediately bought.
Just keep I wish we would have asked about this one a little sooner. 104.91. That was your old-time closing high yesterday. So after a big rally back, you did get over that. Didn't quite get to yesterday's high, but X marks the spot there. 104.91, old-time closing high. Shift 4 payments.
All right. Then I mentioned Fiverr was moving this morning as well. Fiverr, let's see, still down 2% here. Was this an earnings stock as well? No, it wasn't. It was just down 5% pre-market for whatever. Oh, passive Fiverr International passive stake. What is this? Let's see. There is I do see a filing, but I'm not sure what this is.
I could jump into my news flow here too and just go take a look.
I don't know. This is
Fiverr. Not much on Fiverr today. Nothing of note. So,
okay.
But this is another stock, example of stock, $336 in the bubble of 2021. I'll continue to call it that, down to 18. So stock that's lost a lot of money, trying to find its way back. So it's no longer in this vicious downtrend. It's actually come out of trend and, trying to resolve itself a little bit higher here. But still, bag holder central all over the place. You can see struggling at 30. It gets above 30 and they hit it back down. It gets above 30 and they hit it back down. Probably because there's people caught in this and they're just moving on to bigger and better things. They see Tesla going up as much as they are and they're like raising money from other things. And that's probably not happening. But just saying people take profits and they not even take profits. They cut losses too when stocks are in these vicious downtrends.
For a pair of lows at 29.41 until today's session, so it did go to 29.80. But if you want to get back the candles from the last 2 days, you're going to need a sustained 29.41 bid and then work your way up above 29.80. Not much in there, but that two old support kind of acting as new support, new resistance that will be determined. S&Ps, Dennis, we did make a new high here, just flirting with unchanged. Meta, the only mega cap, the big one, Meta is leading the way here on the upside. I'll just tell you, someone's looking for a new all-time high today. This peaked 3 different times above 590. But now it's no higher. What's the all-time high here? If you want an all-time high for this one, 602.95. That's what you need for Meta.
Price target raised at Monas Crespi Hart to $650. That was this morning here. So that's moving up too. Social media companies moving up too. Shopify probably doesn't hurt this one either. So, you're at huge resistance here, 602, 2 days of sleepiness, maybe because of Tesla's strength. There's a little bit of Meta weakness. Tesla shows a little bit of weakness today. Money flies right back into Meta. Hard to bet against Meta here. Even, we are at major resistance though. So respect that 600.
All right, some tickers from the chat. It is ticker time. Feel free to drop them. CMG from Sydney Osborne. It's been a minute since we've talked about Chipotle. Of course, Brian Nickel, the CEO, left for Starbucks. You had the big downturn when that happened, but it looks like the stock's starting to come back a little bit from that. Back up above $60, up about 2% today. Look, I can speak to me. And I go to Chipotle probably once or twice a week. My favorite fast casual dining option out there by far.
Hard to bet against it. We've had that weakness, where maybe valuation just got a little bit too high, $69 down to $48. And then, Joel, you remember you were calling this one at the bottom too. You were saying the $48, and Joel had a good call on this one. Multiple times he was saying 48 is a huge level, and he liked that level. We're off that. We're gone. We're back up, and now we're talking about getting back a lot of the losses here. It's healthy. It looks a lot healthier than it did a couple months ago.
Got hit off earnings 61.25. That's your number in this one. That's been your rebound high off that off the Starbucks low. That was back in that's the August low where everything bottomed, and then I believe this was on the Starbucks news. So there you go. Keeping an eye on the recent high of the rebound, 61.25. Someone asked about, very patiently asking about CrowdStrike. It's in their long-term account. Filling a gap here, very important. I'd like to see it get a sustained 340 bid here, but you came all the way back to fill the gap here at the gap was at 336.34. So a lot of times you come up, you fill that gap. You want to see it sustain a bid here and keep going. A lot of times you get a pullback. But right now it seems to be holding in there, matching highs almost at yesterday in the 342 handle. That's for CrowdStrike.
Yeah, I screwed this one up because I kind of wanted to buy it in the low 200s. We talked about it at 230 after it had the washout day and the key reversal day back on August 5th when everything washed out. And I remember saying at 240, like, I think the bottom's in. I was hoping it would check back a little bit farther, give me a shot at like 220, but it never really did. It kind of just continued up after that. Should have bought the dip somewhere in there. I wanted to put it in the long-term portfolio, and I never did. I had Palo Alto in the long-term portfolio for a long time. CrowdStrike, I wanted to add it, did not. It was a mistake. Stocks come all the way back. I wouldn't be surprised if it eventually makes new all-time highs again, as long as they don't have a hiccup like they did before.
Oh, that's right. I forgot about that.
Yeah,
I did say I was at the time bullish on, that the company would be fine long term and come back. I didn't put my money where my mouth is, though, so maybe that's a lesson for me to learn.
We should have. What about China? Just go quickly to China here, because it does continue to leak. China's having an awful morning here again. And again, like why I lighten up Baba and Baidu on that pop back day. I sold my Baba over $100 after the election. I had that one day where it popped back up. And I was like, I feel like, this is just not the administration that's going to be that friendly over here. Obvious tariffs is going to be a major issue. Not that the U.S. is everything for these companies. They sell stuff around the world, but it's a big piece. So it's hard to, just say, yeah, it's going to turn around. And Baidu, I kind of wish I would have sold it all. I sold half my Baba and half my Baidu. And it was perfect sales. The Baidu, I think, was up at 93. I sold her 93 and a half, and the Baba was 100. Wish I would have sold them all. Like, I'm looking now and thinking, man, now I'm back down in Baidu, and I was up in that for a bit. Baba, I'm still up in because I bought that at 80. But I'm looking at this too, and they're just coming in, and the Trump administration coming in. There's just, I think you got to just sit back. To John Najarian's points, John made some excellent points on our show here today. Is sometimes, you just sit back, don't worry about the technicals so much, but just think about logically what's happening. If we got a new administration coming in, it's probably good for crypto. It's probably good for Tesla when he's sitting there, he's best friends with the president. It's probably bad for Mexico, and it's honestly probably bad for China. So, you've just got to have your list. This is going to be the next 4 years. Now, 2016 data shows that China actually did do well under the last Trump administration, but he controls the House this time too. So, I think it's a little bit different. So I'm just somewhat concerned, about China going forward here. I still have big position in the emerging markets, EEM, but that's breaking down here now as well. I think the technicals are telling you the market's really worried about Trump.
I did want to go back, because I had one more when we were talking about Chipotle, and you said it's hard to bet against. I kind of put, and tell me if I'm silly for this, but I kind of put Chipotle and Costco together in my head, because I think they're both names that if you look at like the fundamentals, they're technically overvalued, but they're just such a presence in the United States, and like there's that brand premium that people are willing to pay for. And like you said, Dennis, it's just hard to bet against, regardless of Costco's PE or anything. I feel like that company is just hard to bet against.
It really is. And you've had to, if you've ever bought Costco, you've almost always had to pay a multiple upwards of high 30s, middle 40s to get it. It just never has been less than that. And even if we go and look at it today, I don't even have to bring it up. But if I do bring it up, I think the PE is probably the same where it always is. It usually kicks around like 45. Somewhere in there, forward PE basis. Costco, 40, 51. So this is getting to be really extreme on Costco. When it's trading over 50 times earnings, usually it's 40s. So even relative to itself, it's expensive right now. But the stock just relentlessly, you see those stores, you go in there, there's just people nonstop. The business isn't going away. You go there and you see you go to the grocery store and you're like, holy cow, I can't believe I'm paying this much for this. Then you go to Costco and it's like, it feels like a relief because stuff's like 20, 30% cheaper in some cases. Some stuff's only 5, 10% cheaper, but some stuff when you're buying in bulk is significantly cheaper. So, people are going there because they're, trying to pay their bills. And, you go in there and you can buy stuff in bulk and it's helpful. So you have everybody shopping at Costco. It's not just a rich person's thing. It's more of a middle class and obviously lower income thing as well. Stuff's just cheaper there. It works for everyone. Stock has been an unbelievable stock. You've always had to pay, but it is a rich multiple even to itself right now at 51 times earnings.
All right.
Elf Beauty, they're talking in the chat, and Elf has been wild here. Kind of got a hold of it. I don't know if like the meme trade grabbed this or not. The $100 to $130 was a huge move yesterday. Pulling back here a little bit today. I think the weakness here in certain names today may actually be a buying opportunity, like the financials, Goldman Sachs rolling over here. Again, if Tesla's obviously down $10, I'm not saying, Tesla's run a real long ways, but I think you've got to be thinking about, stocks that are going to be favored in the coming administration. When you get some weakness on those names, and we're talking obviously financials, and we're talking, obviously we can get out the whole list. We had this prior, and on my Trump, you've got financials right at the top of it, crypto, Bitcoin right at the top of it. Obviously Tesla's on it as well, and the single names, but I think you've got to really, look at opportunities when you get these checkbacks, and that's what you're getting in some of these stocks that, maybe they're not just always necessarily selling opportunities, maybe they're actually buying opportunities. 1 minute.
All right. Well, that brings us. I mean, Joel, do you want to give any technical?
Yeah, I just want to say this, Elf. I mean, you didn't quite get to yesterday's high, but I mean, if you're holding in here, I mean, I think you got to give it to yesterday's low at 125.72. So looks like it's heading there, but after that, gets kind of gappy here on the downside. Real quick, S&Ps did make a new pre-market high. We're just chopping around unchanged here. Mega cap tech all looking pretty good here. Apple now green, Nvidia, Microsoft, Amazon, all these stocks. Google reaching the high of the rebound. So, and Meta marching towards that $600 level. So a little bit weakness yesterday. Mega cap tech looking strong today. Tomorrow's
Meta did fail at that $600 level, which is interesting. Who's tomorrow's guest?
Tomorrow's guest? Well, we have CPI, so you know who we're going to bring on for that.
You're my boy, Blue.
Yep, our boy Blue. Blue Putnam will be joining us to walk us through the CPI number. And then Kevin Merritt. We talked to him from Wedbush, and we talked to him before the election. We told him we're going to dial him up after the election. So,
what's Kevin cover?
He's a managing director of equities, so he covers everything
Nice.
over there at Wedbush
Wednesday. We should make that a regular thing.
And for you folks that have been clamoring for Michael Pachter to come on Thursday, 9 a.m. guest, that will be Michael Pachter. So I know people have been been loving AppLovin, and boy, we'll get an update on that one too. So join us.
That stock is unbelievable. Yeah, APP. Wow, that's been moving.
All right, guys. Thank you to everyone who tuned in with us today on Pre-Market Prep. Our 2-hour show brought us to 10 a.m. as always. If you guys want to leave us some feedback, I know I got to work on my mic. Someone posted a suggestion for a microphone or a headset earlier. I'll have to find that. But either way, we'll be back tomorrow morning, 8 a.m. You guys know where to find us now. See you guys then, and stay green.